Well, we had another nice pickup in share prices yesterday, and we've seen them up for most of the week, barring the small setback on Wednesday. So it really looks like the bulls are back in the markets at this stage.
Yes, and that's, if one looks at the J-toppy trend over the last couple of weeks, we see that it's moving in a rising wedge trend. So unfortunately, investors still quite cautious at the moment because the rising wedge trend really doesn't indicate a bull market. So some investors, limited as they may be, are still buying, hoping that they're not going to miss the turn. But still, a lot of investors still cautious because, we could see it coming off quite quickly if it doesn't sustain its run in the next week or so.
Well, we know that the all share is back above 25,000. It's been above 25,000 for most of the week. Have we been crossing any key technical levels, and where would we go from there?
Yes, with reference to the toppy, we've actually broken through the key technical level of 23,100 on the toppy, but one really needs a sustained break above that, and we could go up all the way to about 25,000 on the toppy, and then probably just on the all share all the way up to 27,000.
Well, I'm intrigued by your rising wedge trend. What is a rising wedge trend, and what does it signify?
Well, the rising wedge trend signifies we are moving upward, but it doesn't follow a bull trend. Whereas a bull trend has a very sharp spike, going all the way up. A rising trend, really kind of leads to a what we call a blow off. So we see it, ticking up slowly, and then when it hits the resistance level, it will come down quite sharply. So, really that's where we're at. And if, one looks at the VIX, there's really no volatility in the market at the moment because of this rising wedge.
So do you think we could have another sharp pullback in these markets? Where would you expect them to go in the short term?
Well, I've been quite bullish myself over the last 2 months, but one really needs a healthy pullback. We need some direction, so we either need to break 23,100 on the toppy convincingly and move up to the 25,000, or we really need a 10% correction, which I think a lot of the bears out there are waiting for, and investors are perhaps looking at the market now and going, it's not breaking up, it's probably too expensive, and they're waiting for an opportunity to get back in.
Of course, we know that our market does generally follow what the US is doing. We're getting those University of Michigan September consumer confidence numbers out this afternoon. Could they be a big driver of future direction? What are you expecting there?
When one looks at foreign markets today, they're mixed because of the Asian numbers that have come out. But really, they are looking for positive numbers. They have been a leading indicator, the last 2 months. So really, investors are looking for those numbers because the US Michigan number is a survey of consumers, and that's really where we need to see the recovery and the confidence coming back into the markets.
Of course, we had the US trade deficit figures out yesterday, and the biggest deficit in 10 years due to imports, of course. Do you think that's a signal that consumer demand is starting to build in the US economy?
I think that number's due to a lot of imports that are coming in from the manufacturing side in terms of your vehicles that are, from the cash of clunkers program. I don't think it's an indication of consumers really spending. And if one looks at the retail numbers that have been coming out, that's really where we're going to get our actual numbers from, our confidence that retailers are back in the market. So, no.
Well, we do know that retail confidence in South Africa remains weak, though we did get that manufacturing and mining data out yesterday, and that was slightly better than expected. Do you think that gave the market some of the impetus we're seeing at the moment?
Yes, in terms of looking at the gold production numbers, that's really, effective of the strike that we had last year in July 2008. So really not a positive indication for in terms, I think what surprised in the numbers yesterday was that gold production came off, and that really is an indication in terms of demand that we're seeing, or rather not seeing, from the US and from the Eurozone. In terms of the other numbers, the copper, the other metals, that was quite encouraging. We're seeing better steel prices and copper prices coming through, so I think that would be really positive for our commodities.
Well, some news that was out this morning, and that's that Standard Bank has gotten a $1 billion loan facility from 4 Chinese banks. And I mean, do you think this signifies perhaps that Standard Bank is looking forward to a pickup in growth and investment on the continent, and particularly from China?
Yes, I think there's a differing of minds of where global growth is going to come from, and really China's come out to say, in terms of this loan, or just supporting that that growth is going to come from emerging markets and rather not from developed markets. And one can see that the banks are all increasing their loans. You saw Nedbank increasing or selling 5.5 billion in notes and preference shares. Standard Bank has come out this morning, I think quite positive. They're looking for growth, and hopefully we have reached the bottom, and we saw with China their lending increasing in August. I think it's quite positive.